Welcome back. Take a look at this market reaction as Donald Trump has been elected the 47th president of the United States. The Dow Jones Industrial Average up better than 3% right now, 1,286 points higher. The Nasdaq up 374. That's almost 2%. And the S&P 500 higher by 130. That's 2.25%. The Dow is on track for its best day in 2 years. Take a look at interest rates. Interesting reaction here. The bond market rallying yields. The yield on the 10-year right now is up 17.7 basis points. That's just shy of the high of the morning. It was up 21 basis points a few minutes ago as the Federal Reserve is kicking off day one of its two-day monetary policy meeting today. We will hear from Chairman Jay Powell tomorrow at 2:30 p.m. Eastern. The Fed is widely expected to cut interest rates tomorrow by 25 basis points, with the futures market pricing in a 98% chance. The Wall Street Journal's Nick Timiraos writing that the Fed now faces these four questions. First, does the election result lead to meaningful change for economic demand or inflation that warrant a different policy path? Two, have jitters about job market deterioration been overstated? Third, where is inflation headed? And fourth, what is the right level for rates anyway? Nick Timiraos joins us right now. He's the Wall Street Journal's chief economics correspondent and the author of $1 Trillion Triage. Nick, great to see you. Thank you so much for being here. Before we go through your questions, I've got to get your take on this move in interest rates. What is behind a 17 basis point rally in the yield on the 10-year in your view?
Well, I think part of it, Maria, thanks for having me, has to do with better growth expectations. You know, we've seen really over the last month and a half the market pricing in a soft landing, stronger growth, maybe a little bit higher or stickier inflation. And so, you know, I'm not an expert on the bond market. I'll leave that to your other guests. But that has to be part of the story here. There's a stronger growth outlook and maybe a little bit firmer inflation path ahead. As for what it means for the Fed, I mean, I'll be very interested to hear what Chair Powell has to say about this, but I'm afraid he's not going to say very much. The Fed doesn't really want to be front and center during a big kind of political season. And so I would guess that a lot of the answers we get from him tomorrow will be some version of we'll see and it depends.
And it depends on what Trump's policy plans look like, and that he'll assess those Trump growth policy plans and see what it means for the Fed. I mean, he can't really say what it means anyway, right? Because we have to hear from Trump in terms of specifics on those policies.
I think that's right. You know, what happens with the extensions to the tax cuts from 2017? Are there new tax cuts? As a candidate, Trump talked about many different changes to the tax code. No taxes on tips, no taxes on overtime. So we'll have to see if there's anything above and beyond, you know, extending the 2017 cuts. Tariffs remain a wild card. What does that do to growth? Does it send up prices? And so, you know, we'll see there. We still don't know what kind of control Republicans are going to have over the House. So there's still a lot to be sorted out. But I think if you go back and you look at the Fed last time around, they didn't react very strongly to the Fed's tariffs. They didn't, to the Trump administration's tariffs. They ended up cutting interest rates in 2019 because they were more worried about slower growth. So I think there's a lot that still has to be settled here. But what you're seeing in the bond market right now suggests maybe fewer Fed cuts next year than what had been priced in before.
Well, that fewer Fed cuts than what was priced in before, I would imagine, would send stocks lower. What do you make of this huge rally in stocks right now?
Well, it depends why the Fed is cutting. If the Fed is cutting because the economy is slowing down, you know, unemployment rate rising, those aren't, you know, that's not good for the economy. So I think you see a situation here where the market's just betting on higher real growth. And so that would explain what you're seeing with the dollar, what you're seeing with interest rates, and what you're seeing with equities.
What kind of a growth number would you expect in the coming few years? Could we get back up to growth of 4%?
Well, that seems, you know, that seems like it would require something on the order of a productivity boom, right, Maria? Most economists think potential output for the U.S. is around 2%. Now, maybe it's been a little bit higher over the last year or two. We've had higher immigration, so that's been increasing the labor force. We've had higher productivity. 4%, you know, seems probably at the high end of what most people might expect. Maybe you get 3%,
okay,
and maybe you have inflation running closer to 2.5% than to 2%.
Yeah, really important analysis. Let me get your take on this Fox News voter analysis. 40% of voters say that the condition of the nation's economy is not so good. 30% said that it is good. 40% said that inflation is the single most important factor to their vote, with 64% backing Trump to better handle inflation. 50% of voters said that Trump is better able to handle the economy versus Vice President Kamala Harris at 41%. Your reaction to which issue here is most important and how you view voters' reaction?
Well, I think that's, a really important question, Maria. If you look across the world at other Western advanced democracies, incumbents have just been punished for the big increase in prices after the pandemic. So whether it was the Tories last year, whether it was, parliamentary elections in other European countries, you've seen voters take their frustration out over the large increase in prices on the incumbent party. And I think that explains a lot of this with the result we had overnight. If you go back and look at what the Biden administration did in 2021, they were really fighting the last war. They were burned by the experience of 2009, when they felt like they didn't do enough to stimulate the economy after the financial crash. And so they said, okay, we're going to overfill the cup. We are going to do, we're going to err on the side of doing too much, and we're going to make it really obvious to people, right? Send out checks, let them know that we are trying to help them through the pandemic. And when you got hit by 9% inflation the next year, voters were going to hold the incumbent party accountable for that. And I think that explains a lot of what we're seeing here.
Nick, real quick, do you think this deregulation that Trump is talking about could lead to a production boom? Like you just said, you want a productivity boom in order to get to those kinds of economic growth numbers.
Yeah, you have deregulation, you have, the diffusion of these generative AI technologies across the economy. I think the big question now is, what kind of economy will Trump inherit? Will it be one that's growing solidly with a soft landing in view, or do you have a labor market that continues to slow down, high mortgage rates that are going to put a brake on growth? I think, that is not at all resolved yet, even though a lot of economists on Wall Street say the soft landing is here.
Okay. Nick, great to have you this morning. Thank you. Nick Timiraos, Wall Street Journal.
Thank you so much.
Thank you.